So let's actually define what the word quant really means, because it gets thrown around constantly, but I rarely see it explained. A quant stands for Quantitative Analyst. These people often study advanced mathematics, physics, or computer science, and funds will recruit top talent, often on some of the highest salaries in finance. Their job is essentially to replace opinion with a real measurement. So discretionary traders, they'll build a view on the market. Quants will build a model to represent that view. They'll test it on history, they'll model it on different variables, and they come up with a real tangible system based on real constraints. They don't usually work as lone geniuses, although there are a few. They usually split up into different departments which handle different segments of the market. One team will typically research signals, one on risk and sizing, because every single element that comprises a trade requires a different skill set and different parameters. Now, of course, I'm generalizing here because every single fund operates differently, but at a large scale, this is typically how you see them operate. Now, if you're a trader, here's the fundamental difference between how you might see a chart and how a professional quant trader might see a chart. Most traders just see price, so they'll look at where it's been, they'll look at where it's going, and essentially the entire read on the market is directional. A quant will often analyze violence or volatility first. They'll look at how hard the market is moving independent of direction. So a retail trader might think, this feels dangerous. A quant would essentially hear an incomplete sentence. They'd be thinking, well, dangerous is a measurable quantity, so what's the number? So instead of every morning looking at a price target like a retail trader, quants will look at volatility, value at risk, position sizing, Greek's exposure, expected moves, and they'll apply stress tests to market movement and essentially try and combine all of that into a single score. In today's video, I'm going to refer to that as the violence score, but I'm aware that it's a lot more nuanced than that in practice. And underneath that system is essentially a single mental model. And it's the most valuable idea that I want to present to you in this entire video. For every trade that you ever take, you'll essentially just ask two questions. Which way, so in which direction do I think price will move, and how much? So how much am I willing to stake on this position? And the second question is something traders often get wrong, even though it's the most important in terms of profitability and survival in the market. And that's how you can have traders with a really high win rate, but they're actually not profitable, and how you can have traders with a lower win rate, but they are profitable over time because they understand when to size and how to size. Retail treats which way will price move as essentially the entire game. Position size is usually an afterthought, whereas a quant will rank those two questions by how answerable they are. Which way is barely answerable. It's actually the weakest signal in trading, whereas how much you actually stake is fully controllable. It's the one variable in trading that's actually at your command. So often a quant will invert energy allocation, meaning they'll put minimum effort on a question that can't be answered reliably, and then they'll put maximum rigor on the variable that can be controlled completely.